This week's episode, we talked about life insurance products that are offered to us through the city, at least to me, and the optional ones that come up during open enrollment. Not everybody signs up for them. I decided to sign up for them this year. I don't know a lot about them, so we kind of went through the general list of what you are entitled to with these. So it opened up more questions for us. So hopefully we're going to do some more research to get these answers and then have those answers for you in future podcasts. But as of right now, we got a good general overview of what is offered to us, the other options that we can add on later if you want to add them on. And hopefully it helps out.
Welcome to the Cedar Harvest Show, where we focus on financial education for a variety of things that affect not only your life, but also your spouse, children, charities, and your legacy. We discuss everything from health insurance to pensions, wills and trusts, the best way for everyday tax planning. Our intention is to bring financial and legal professionals together with everyday people, in this case, everyday LEOs, law enforcement officers, who need their help. We have real conversations with real people who have real questions and scenarios. I'm your host, Mario Lizarraga, and today's show is part of our law enforcement series. So I'm happy to have our co-host, Officer Ty. Hi, buddy. All right, back again, who is an 18-year law enforcement officer currently employed here in Arizona. All right, so today we're going to talk about some of the benefits that you have access to as a government employee, specifically through law enforcement and public safety, right? I mean, you guys have your own special group pertaining to fire, law enforcement, and who else is part of that demographic? Is that it? Part of that?
So, yeah.
Okay. So we're going to rip back a little bit about some of the things offered through the PSPRS, and just today we're going to specifically talk a little bit about your life insurance benefits that are offered to you while you're working.
Okay.
Next podcast, episode 2 of the life insurance series for what you're offered, we're gonna talk about what happens when you leave the department and the options that you have to have at that point.
Okay.
But for this podcast specifically, we're going to discuss what you have access to right now.
Okay.
Which is term insurance.
Okay.
Okay.
Well, that's good because, like I said, I think I told you off camera, a lot of these I signed up for this past open enrollment, so I didn't have these before. So now I don't know a lot about them. So
Okay. Well, I'm happy to kind of talk about it. We do have the website pulled up. I should probably record it, but I'm not going to worry about it. We can bring those benefits in. But so basically, we're at the pages.securian.com/enrollment/employers/city-of-phoenix.html. And as I get into this, I get into life insurance benefits, and I'm going to click on the view now, and it's actually going to pull up a PDF, which we will include this PDF in the back of the podcast so people can go back to it and reference what we're seeing ourselves.
okay.
And so really, there's some really cool things that you're offered as a city employee, which is great, right? Well deserved. And what's kind of cool, after reading through this brochure, not only is it kind of good for you as an employee, but it's also good for your spouse and children.
Okay.
So it was really interesting to go through and read about this and understand how affordable it can be for your family, which is great. Just a little added protection never hurts.
Yeah.
Pretty affordable from what I can see. These prices could be high, could be low compared to the individual market, because the one thing about these plans, which is so cool, is it's what's called guaranteed issue.
Okay.
They're not going to ask any health questions,
Yeah, they didn't ask anything.
right?
And I
They're
did
just,
it
hey,
for
we
it.
want to sign up, and what's your age?
Yeah.
And are you male or female?
It's pretty much just a
That's it.
button I clicked.
Yeah, that's it. And the price is the price.
Okay.
And after reading through this a little bit, it's kind of really cool. So it doesn't matter if you have one child or 10 children, you're going to pay the same amount for all the children included in one lump sum price, which is very intriguing.
Okay.
Right? It's not a
So you don't have to pay each one?
You do not. It's what the brochure says. And we'll get to that portion of it. So, let's just kind of start from the top here. We'll just kind of read right through this brochure a little bit and we'll discuss it. So, there's a couple things here out of the gates. There's the first title, life insurance coverage available with no health questions. Guys, you have no idea the value of that. In the individual market, there are people out there that I talk to all the time. They want life insurance, but they don't want to get it until they realize they're mortal, right? Meaning they've had a life event,
Okay.
right? They've had that stroke, they've had that heart attack, that cancer diagnosis. They've had that bad wreck. They've had something that makes them life flash before their eyes. And they're like, oh man, maybe I am going to die someday.
Maybe I need to get something.
Maybe I should. And most people typically wait till it's too late.
Okay.
So the great thing about you guys here, as long as you're an employee, you have access to get these plans.
Okay.
Okay, but the bad thing about these plans, and this is what real important that people understand, how long this plan is going to stick with you after you
Like
leave
would you retire?
is different, right? There is portability from what we've seen. You can take the plan with you. What we're going to find out in more detail for next episode is exactly for how long and try to get some ballpark pricing. And guaranteed it won't be near as affordable as this, and there will be a limit to the duration. So it's not like you're going to be able to keep these coverages in place for life.
And when you're saying portable, what exactly?
Meaning when you leave the department, it's portable. You can take that policy with you.
Okay.
So these life insurance contracts that people get through work are either portable or not portable.
Okay.
Right. And portability is important because what if all of a sudden, you're in your last year and heaven forbid you got diagnosed with cancer,
Okay.
right? And then you go to leave the department because you're ready to retire and you want to focus on healing. Well, you're going to want to keep that plan in place, right? Especially if you had some sort of life scare.
Yeah.
And so you're gonna want to take it, and you're probably likely willing to pay a premium to keep that policy in place because now all of a sudden you have a life event happening.
Okay.
So that portability is critical.
So if it wasn't portable, what would that mean then? Like once she retires,
Once
done?
you're done, you're done.
Done?
Correct. And that's what we need to what I want to have detailed conversations with whoever can answer those questions within the department so we can find out definitively
Yeah.
and tell everybody on here who's listening what they have access to.
Okay.
So but while you're an employee, looks pretty fantastic from what I can see. It looks like initially out of the gates, within 31 days of your initial eligibility, you can enroll up to $150,000.
Okay.
Looks like you can enroll your spouse up to $50,000. And then from that point, after your initial eligibility, which I don't know if you guys have a 90-day waiting period, 30-day waiting period, there's usually waiting periods for every group plan.
Okay.
And they told you that during your benefits briefing, and they told you what that
When we get hired?
yeah,
Yeah.
likely.
Yeah.
They told you about what that waiting period was.
Gotcha.
So that's why here on what I'm looking at from Securian, which is Minnesota Life, which is a great company. I'm appointed with them myself. My children have permanent policies with Securian. Your child does. I really like Minnesota Life. It's a good company. So I'm happy to see that they have your benefits with a good company like that.
Okay.
So initially, again, you have some lower limits of what you can buy into, and it looks like each annual open enrollment after that, or within 31 days of a family status change. So if you were to have a baby, if you were to get divorced, married, there's a variety of triggering family status events
Okay.
that will trigger some enrollment benefit options for you.
Okay.
Okay, and people under health insurance, yada yada yada. It looks like that you have, as the employee, you have the ability to enroll for up to 20,000 or up to $20,000 or increase existing coverage by up to 20,000, but not to exceed a new total of 150,000. So that's interesting. I want some clarification on that. That seems kind of counterintuitive there, but I could probably read through it a little bit more and get a more definitive. But either way, $150,000 looks like the limit initially. Looks like your spouse can increase existing coverage by up to $20,000, not to exceed a new total of 50,000. So it looks like that if you don't elect into coverage for your spouse during the initial eligibility period,
Yeah.
the next eligibility period that comes about, you can just you can revert back to what you could have gotten to begin with, which was $50,000.
Gotcha.
Oh, well, it says $20,000 increments, so probably $40,000, right? Because it was in $20,000 increments.
Okay.
Can't hit 50. But it says not to exceed a new total of 50,000. So I guess if you started with 20, but you want to add on another 20, you're going to have that eligibility upon open enrollment, it looks like.
Okay.
Health questions never required, which is beautiful. That's a guaranteed issue is a great thing. Typically, you're going to pay a little bit more for death benefit when it is guaranteed issue. And typically, when you talk about group health and coverage, you're going to pay a little bit less because they're spreading the risk over the whole massive group. So when you have a massive employer like a large municipality we're talking about,
Yeah.
that's going to be spreading that risk level across a lot of people,
Okay.
which drops the overall benefit because everybody's kind of everybody's getting something, right?
Okay.
Because I imagine as a
But like with something like this, not everybody elects to have it. So does it?
well,
Does
the
that
employee. So what I'm not seeing here, what I'd like to go back into someplace in here. I'm sure as an employee that you automatically get some sort of basic benefit.
Yeah.
And I don't know, and I would like to find, and we will find exactly what that base benefit is, regardless of what you choose to add on.
Okay.
Right. So, but typically some group plans say automatically for your spouse as well. Some group plans automatically say a minimum benefit for your children.
Okay.
So I just don't know, but I'd be very curious to find out, and that's why I'd really like to talk to a benefits specialist who works with this day in, day out to answer those what are typically kind of trivial questions, but
Yeah.
I don't work within the government, so I couldn't tell you.
Yeah, okay.
Being on the individual side, I can tell you I've seen a lot of heartbreaking situations where people are desperate to get some life insurance in place, and they can't.
Or the health.
Because of their health.
Health. Yeah.
Yep. Nobody wants life insurance until they have a problem typically.
Yeah.
And so even with permanent contracts, which I highly recommend for everybody, I always try to get yourself some coverage in place while you're healthy,
Yeah.
right? Don't wait until it's too late to recognize you want a death benefit for your family later on. Because this situation here is not the case in the individual market. Okay, so let's kind of keep going here. Let's say what your optional coverage is. Okay, so this is kind of cool. It looks like here, in addition to the basic term life insurance and AD&D insurance provided to you by the city, you may also elect into the following coverage options and pay for them via payroll deduction. Okay, so now we're getting into some optional benefits.
Yeah.
So it looks like those were exactly what I was talking about. Like you're automatically going to, it looks like employee enroll for up to 150,000 going back for up to. Why would they be discretional there? It doesn't say what you get automatically, saying you're able to enroll up to $150,000. And it doesn't sound like they're taking anything out of your paycheck for that up to $150,000. Surely they are. But as we scroll down here to is that page 3? Page 2, it is showing that you get this optional life and AD&D benefit. So you, the employee, can buy in $10,000 increments up to $250,000.
So is that like when it says increments like that, you choose it right away, or is that like every year you do it? How would that work?
I would imagine it. I'm not seeing it. Again, this is where we need to find out at what point, uh, because it says $10,000 increments. If you win $10,000 increments up to 250, maximum of 500,000, and then you could do in $50,000 increments up to 500,000. Again, maximum of $500,000 includes matching AD&D benefit.
I was saying, if you purchase it, is it something like every open enrollment, it just goes up if you stick with it, or is it something you have to buy it? So like when it's talking about increments, like what are the increments? Like,
Well, the increment here is in 10. If you buy in $10,000 increments, you can go up to 10 up to 250, and I'm sure you can do that out of the gates. It doesn't. I'm not seeing any exclusions in here.
but you said what? You said 250 was the max, or 500?
When it says $10,000 increments,
So we'll just say 10,000 then.
so
So that's the increment. Let's say I purchase 100,000. Can you?
10, which is 10 increments.
Yeah. So is it saying like is it giving you a limit, or is that something we need to find out?
It looks like the limit you can buy is 250. I don't think in a time component. I think you could elect to and right out of the gates when you're eligible.
So if I want to do this, I want to do 250.
250, boom, you can do it. And down below here, we're going to get into the prices. I see the price chart down below. We'll talk about that 250. So it's kind of interesting, and I would like again a little clarification. Why if you buy a 50,000 increment, can you go to 500,000? I'm not understanding the logic there, but I'm sure they have some kind of rationale of why they're doing that. Either way, you can buy additional up to 250. So I'm saying if you had 150, so from what I'm reading this correctly, it looks like you can get up to 150. It seems like the city's paying for because it's not giving any prices, or maybe they just have a flat fee they charge you that I'm not seeing that maybe you're aware of. But in addition to the 150, you can add on your optional life up to 250. And then it says up to 500. So what the difference is, I don't know. And then it says here your optional spouse life you can do in $10,000 increments. It says up to a maximum of $300,000. So up to $300,000, so which is still pretty good when it's guaranteed issue. You know, if you had a spouse that was a type 1 diabetic, right? That's a problem, right? There's a lot of people who have lupus, they have chronic illnesses in their life, and maybe they're managing it. They have MS, right? There's a lot of, very manageable diseases that are out there that absolutely disqualify them from buying life insurance.
Really? Okay.
So this is where this is really good for those people that unfortunately have.
If you have those, or if you have that in your family history, does that matter?
Have them.
You have to have it?
Yeah.
Okay.
No, if you're diagnosed with it.
Okay.
Certain things, if you have it in your family history, it can be problematic for you, but not typically. They're going to ask a few things. That's more common in long-term disability policies.
Oh, okay.
And versus in long-term care policies, but not so much in the life insurance. They just want to know, a lot of times with the application, they're going to have a question on there. Did your parents die before a certain age?
Gotcha. Okay.
Right. And if so, then they're going to want clarification on what.
Okay.
Right. And did your parents, did they get some sort of mental, Alzheimer, dementia prior to a certain age? Right?
Gotcha.
But that's more on the long-term care policies, long-term disability policies, and is the death benefit policies, especially term. Term is much different.
Okay.
Okay, so then it looks like optional child life policies, you can also add on 10, 15, or 20,000 or 25. And then children are eligible to be on here until 26. It's kind of cool.
All right. So what happens at 26 then?
The bill goes away, but so does the benefit.
Gotcha. Can you convert those to
That's what we want to know. Are these policies portable? And I wonder, is it portable? That's a really good question. So on the portability question, if you'd write this down, please, that'd be great. On the portability, is it portable just for the employee? Is it portable for the employer or the spouse? And is it also portable for the child?
Okay.
Right. And again, with the portability side, how long is that policy going to be good for? Right. Because these are term products, but I'm not seeing the term. If you recall, when you're buying a term product, that means that you're buying a specified death benefit for a certain amount of time.
Yeah.
10 years, 20 years, 30 years. And so if you pass away within that time frame, it pays out. But people don't realize that only 1.5% of term policies pay out.
Oh, really?
Yeah, that's it. That's industry standard. So
1.5%?
that's it. That's why these insurance companies are so flush. They take your money and that's 98.5% of the time they do not pay out.
I guess that makes sense. One of the health guys I follow, he used to do that, and he was saying how accurate whoever
The
works with,
actuaries.
yeah, how accurate they are with knowing when people are gonna, when they're doing their analysis, they know pretty like within months.
It's pretty spooky.
Yeah, it is kind of
It's
scary.
pretty spooky. And so unfortunately for you guys, for law enforcement, as we saw the other day, the average male lifespan is 66.
Yeah. Well, I mean, that was something they told us in the academy, was that I think, I mean, sure, it's changed. They told us then it was like 5 years. Like most officers after they retire, it's like 5 years later they pass away. So, you know, some of the older school cops worked for a long time because they didn't have anything else that they could do, which I think that's another trend that's kind of changed a little bit. Like a lot of guys now have other things they want to do. They're retiring, Me, I'll be 46, 45, 46 when I can retire. Like, could have a whole other career if I wanted, and that's what. But I think back then, guys were staying like 30, 35 years, and really couldn't do anything else after that. So that was their life, and they, 5 years after they retire, they're passing away from the laundry list of things that cops have, like heart disease and some of the things that were a lot higher on the spectrum than the average person. So
Right. So I don't know, the whole pension process for you guys really doesn't pay off as well as it does for some other
no,
industries,
it
right?
doesn't. No.
So let's talk about some of the prices, right? This really looks pretty good. And it's honestly, so let's just talk about you. I believe you're 44.
Yeah.
So it looks like in the optional employee and spouse rates, this is $1,000 per month. It looks like it costs you 9.5 cents. So let's just say 10 cents per $1,000. So that means every $10,000 is $1. So every $100,000 is $10
Yeah.
out of your paycheck. That's not bad.
No.
And you can do up to $500,000. So basically, $50 a month, you can get yourself a $500,000 guaranteed issue benefit contract. I do believe you can find that cheaper on the individual market.
Yeah.
Going through an underwritten plan where where they're going to come out and take blood,
I
urine,
was just saying that, but they're gonna ask you the health stuff, right?
fully underwritten
Yeah.
plan. And so I imagine you're going to get that 500,000 much cheaper, right? I'm willing to bet you could probably. I would be surprised if you could find something out there for $25.
Yeah. But is it that price because they don't ask all the health questions?
That's
That way
exactly right.
Yeah.
Yep. And then it just kind of goes up per thousand from there. As you get older, clear through life, if you're a 60-year-old, it's going to be 52 cents per thousand.
Okay.
Big difference,
Yeah.
right? $5.20 per 10,000, times 10, so that's 55,000. Or wait, that's more than that. So 55 cents per thousand. 5 cents per thousand. For 10,000, we get that by 10, 550. Well, not terrible. So if I'm doing my math right, still, again, if you have a chronic illness or something, this is great. But I'm here again, I want to see the price
Once you leave.
once you leave.
Yeah.
What does that go to? Because I know I heard you say something that you can take it with you. You read something.
Yeah, they read it on it said you can, but it didn't really go deeper into that, like what the
It just said the price goes up
Yeah, it did. It said the price will go up.
and it goes up big time.
Yeah.
guaranteed. And
And then
for that long.
will they make you do a health thing then?
No,
Likely.
no, because it's hard. That's the whole big deal of portability, right? If you're going to do a health thing again, you're just might as well do a whole new application, right? Individual application.
So you're saying if it is portable and like I retire and it's able to do that, they're not going to like once you retire, they're okay. Now you got to do a health because we're changing this, so it wouldn't be like that.
Well, they're gonna if once you
Does that
retire.
make sense? How I'm asking that?
Yeah, if I'm understanding you correctly, basically, if you retire again, you're going to be outside of the group. Your
Okay.
now plan that started in the group is now portable. You're taking it with you,
Yeah.
and now
That's
you're
what I'm
outside of
saying is, are they going to ask you now? Then okay, now you got to do the health screening,
no. That's the value of it being portable.
but they just will charge you more.
They're going to charge you more for sure.
Yeah.
And what's the limited duration? So again, this just tells me right here that if I were a police officer and I was considering retirement and was diagnosed with something kind of bad, and I was 55, I might stick around and decide to work a little bit longer to keep this kind of benefit in place, especially knowing if the average lifespan is 60 all X.
Gotcha.
You know what I mean? It might be it's worth factoring in that if you do have a job that has this benefit in there. I don't know if
Well,
that's
hopefully you didn't put yourself in drop because then you got to leave when you hit your end of your drop period. So
didn't everybody?
what's that?
Do you know anybody who didn't do drop?
I do know people that haven't done it. Yeah,
Oh, okay.
but most guys do it. But along with that, I think a lot of the guys that do it don't. A lot of them, not all of them, don't have like their plan is when I retire, I'm retired. I'm done. I'm not. I don't plan on working anymore. Like I'm done. So I think guys who are a little bit younger that are retiring and aren't choosing to do drop, I think they have plans to do things outside of police work. Like they already have plans to do things. So
One of the things I want to kind of talk about before we end this particular podcast is the term AD&D. Do you know what AD&D means?
is it accidental
Death and
death and dismemberment? Yeah.
Yeah, right. Okay, so let's just talk about that. So some people, it's pretty straightforward. Obviously, accidental death. Typically, with most insurance plans outside of this group plan, and I would assume this is no different. And typically, if there's an accidental death, it typically doubles the death benefit.
Okay.
Right. But then the dismemberment side also brings in benefits to the table if you have a loss of hearing, sight, paralysis, and a variety of other things as well.
Okay.
All right. But these are things stemming from an accident.
Does it have to be on duty or like at work?
It doesn't say that.
No.
It doesn't say that. But
Okay.
again, that's a good question. In order for that AD&D benefit to kick in, does it have to be on duty? I would imagine the answer to that is no.
Okay.
Because I would think that you probably have additional benefits, but this is another question we should find out. Like when you're on duty, if you were to lose an eye,
Or get shot and can't work anymore.
what's the difference?
Yeah.
What kind of other benefits kick in for you there,
Okay.
right? Versus this contract here, because really this is kind of a standalone policy
Yeah.
that you have access to as an added benefits as a thank you for working for us. We've worked out this deal with this company, Securian Life.
Yeah.
So this Securian Life is offering you this benefit because you work for this company, right? In this case, the city.
Yeah.
So AD&D, it doesn't really kick in that often, but when it does, it does, and it typically again doubles the death benefit. I'm not seeing that here, but I would think that that's probably likely what the scenario is going to be. Let's see what else we have in here. Can I take my coverage with me? Oh, here we go. That's what you read it. Where you read it, you can continue to be insured with Securian beyond active employment without answering health questions.
Okay.
There it is in black and white.
But I think it did say it goes up.
Premiums are generally higher than those paid by active employees, and that word "generally" is 100%.
Generally means yes, they're going to be
Yeah.
more.
Yes, that's a very kind way of saying, "Suck it up, Buttercup. You're gonna be paying more." And how? Again, the question I want to have answered is for how long can you keep it? So it's great. So it means it's portable. This is summary plan provisions, and that is the end of this big 3-page document. So they've left a lot to the imagination
Yeah.
for me being in the insurance business, which doesn't surprise me because they don't want to overwhelm me with information.
Yeah.
So
So I mean, if I didn't have you here, I wouldn't know portability. I never heard that before, so I wouldn't know.
yeah, most people wouldn't. So it's understandable. But again, I
I think
think
it's not even something I would have thought about. You know what I mean?
yeah, and again, this is where with you, part of what we did with you is we put in addition to what you have through work.
Yeah.
If you recall, we did the $750,000 plan.
Yeah.
Right, and we did that as a term policy, so it was still affordable. What was that? Do you recall the price? Wasn't that like 40?
40. I want to say it's like $42.
Well, there you go. You can see the
that.
price. A 44-year-old here getting 500,000. It's 55
Yeah.
or $50 for you. And,
Yeah.
you know,
And mine was $750, and it's like, I think it's like $42.
yeah, so for 750.
Yeah.
But the great thing about your plan is your plan is convertible, right? So that's 750. You have 10 years to convert that into a permanent product. And when you convert it into a permanent product, as long as you keep the plan, 100% of those pay out,
Okay.
right? Versus the term where 1.5% payout.
So, not to go too deep into that. So with terms, even with like a 30, like what are the typical, what do people typically get with the terms? Like how long?
10 and 20.
Oh, okay.
I don't know any because the longer you want it in place, the more expensive it is. It's kind of like locking in your lease
Yeah.
for your apartment. You know, you rent a house. You know, typically think about how it's cheaper if you lock it in for shorter periods of time,
Yeah.
right? Or it could be, or sometimes it can be more expensive, I guess, with a house. But if you're going to try to lock it up for 10 years, they're going to charge you a lot more, right? And so this rental insurance is what I call term insurance. It is renting your home. It's going to go away. Eventually, it will fall off, and whether you
So
want to
that
buy it or not, it doesn't matter. But your policy that we put you in outside of the department, it is a lease to own,
Gotcha.
right?
Okay.
You have the flexibility. You could choose to say, buzz off at the end of 10 years. I don't want to pay this anymore. I do not want to convert it to a permanent policy.
Yeah.
So basically, you just basically pissed away $600 a year for 10 years. So $6,000 to the insurance company, right? Or you can choose to convert that into a permanent contract, and and then in the future, when you do meet your maker,
Yeah.
you know that money's coming back to you.
Yeah.
Price is going to go up, obviously, considerably, but at least you're putting into something that's going to be self-completing.
Yeah.
And so I'm definitely an advocate of permanent insurance. I mean, of course, there's a lot of people out there like, well, you can make better money elsewhere. Well, yes, but you can also lose money. So that's one thing about the life insurance. It's a guaranteed way to make money, unfortunately,
Yeah.
right? So
The permanent one.
the
Perm
perm,
Yeah.
yeah, the term is this is Securion's going to win on this deal.
Yeah.
These are good. They love the term contracts. So, but either way, that's kind of a quick overview about what I'm seeing here. And now we have some portability questions. We know we want to get follow-up answers on a next episode.
Yeah.
And then we can dig a little bit more into also, again, I want some clarification about what you're given without the optional.
Yeah.
That is not clear in here.
Yeah.
I'm sure somewhere in here it's clear that, oh, Tyler, we're giving you $50K out of the gates,
Gotcha.
right?
Yeah.
You know, and and that's if you get killed off duty, right? You probably have just some basic benefits, and heaven forbid you get shot in the line of duty.
Yeah.
I'm sure there's a whole nother slew of benefits, and that's really what our show's all about here is to kind of break it down, and so we can have a clear understanding.
So 2 more good questions to kind of look up.
Right?
Yeah.
Right. And what happens if you get killed in the line of duty or off
It's
duty?
gonna happen off duty while you're still working. Like if you
While you're
something happens to
employed.
you while you're employed. Yeah.
Right, right. But I'm sure there's got to be a different set of benefits that kick in.
Yeah.
I would think. But again, I don't know. And it's kind of, and you telling me you don't know? See, that's kind of odd to me. Seems like that's something that would be a point of concern, but I guess you just don't think about it because you
Yeah.
can't walk around thinking about that.
Yeah.
Right. So maybe it's just a lot of people don't like the thought of life insurance for that
I
reason.
mean, I'm sure some people working know this stuff, but no, I don't. I've never, never looked into it.
You guys don't sit around talking about it?
No.
Sounds pretty exciting.
No. Yeah.
Right.
I'm sure it is.
Here's that crackhead. What about that life insurance policy we got a hold of? Did you see that new benefit that they're in?
If we contact this guy and something goes wrong, yeah, get shot. What's going to happen with our life insurance?
That's funny. Well, all right. Well, I mean, we can rap about life insurance forever, but I think this is probably a good jump off point until we get a little more clarification.
Yeah.
And so another one in the books here, and we're gonna peel back and just put another little plug out there that we are looking for any questions that people might have.
Yeah.
Our job, where we're gonna try to locate the professionals within the specific departments that have the answers.
Yeah.
Right. So that we can just kind of break it down and get a better general understanding. So don't hesitate to reach out to either myself or Officer Ty. Comment through the channel if you'd like to be a guest on here because you are knowledgeable about this subject matter very well and you want to show everybody how smart you are. We love smart people.
Yeah.
And we'd love to have you on as a guest. So please raise your hand and we'd love to have you. But another one done, buddy. All right.